Ernie, we're looking at the Business Conditions Index for April. How does it look?
It was very strong, Cindy. Our survey of supply managers in 9 states, almost every factor was looking very good for the month of April. I think we can say pretty definitively that this regional economy is out of the recession, moving forward. Most everything looks good. There were a few negatives underneath the surface, but all in all, it was a very good report for the month of April.
How about the prices paid index? Are we seeing some issues with that?
That was certainly one of the negative factors coming out of our April survey is the prices paid index, which ranges between 0 and 100. Anything above 50, and that's 50 is growth neutral, is indicating, of course, growth and a little bit of inflationary pressures. The number's above 80 now. This is very, very strong, and of course, this just indicates that purchasing managers, supply managers are telling us that the prices paid for raw materials and supplies and other factors that they buy are just heading higher and much higher. And 33% of, when we asked them to look ahead 6 months, 33% of the supply managers are expecting prices to grow by more than 5% in the next 6 months. Of course, that's not good. That's ultimately, in my judgment, going to show up in consumer prices. And certainly, even if not there, we're seeing price bubbles. And of course, the Federal Reserve is sitting on their hands. That's just not where they need to be. President Obama named 3 new members to the Federal Reserve Board last week. Those 3 members all are soft on inflation, in my judgment. So I think the Fed's getting behind here, and that's not going to be good for inflation. I think the market is sending clear signals that the Fed needs to be raising rates right now. The economy is certainly strong enough to raise rates without having a real significant negative impact. It would, of course, lower growth, but we need a little slower growth right here. Job gains for the month were quite significant. Even the Bureau of Labor Statistics data matches our data. For quarter 1, we saw job growth in almost all the 9 states, almost every one of the 9 states for the first quarter. I expect second quarter to be even better job growth, and of course this is contrary to what most economists are expecting, and actually contrary to what I expected 3 or 4 months ago. I did expect job gains for quarter 1. I just didn't think they were going to be this strong. I didn't expect quarter 2 numbers, that's job growth numbers, to be strong. It's looking like they're going to be strong. So again, the Federal Reserve is getting behind this, and like as they did last time being the last recession. So I think the Fed really needs to begin raising rates. We've got interest rates at lowest level since the Fed was formed in 1913, ranging between 0 and 25 basis points, 0.25%. Obviously, very accommodative, very, very supportive of, in my judgment, inflation. So that's my real concern coming out of our April survey.
What about the impact on trade numbers and imports?
The trade numbers are looking pretty strong, even though, of course, what we're seeing in Europe, as you and I speak today, Greece is teetering on, I won't say bankruptcy, it's certainly not bankruptcy, but defaulting on some of the sovereign debt. Also, Greece is now it looks like they're going to restructure that debt, and of course that's good news, but that's the real fly in the ointment, economic ointment, if you will. I think that may be what's pushing the Fed to hold off on raising rates, but that's not enough in my judgment. The trade numbers right now are looking pretty good. New export orders were good. Imports were strong. And of course, a lot of that is not Europe-centric, meaning that we're seeing more growth in Asia, and that's where the growth is, Asia, South America, of course, Canada as well. Everywhere actually except Europe, and of course that's a big except. We've got the pigs, that's the Portugal, Ireland, Italy, Greece, and Spain. That's P-I-I-G-S, double I there. Those are all looking weak. I mean, we're talking about Spain's unemployment rate 20%, for goodness sakes. That's going to have some impacts, and it's not going to be a good impact. But again, I just don't think that's enough for the Fed to be, in my judgment, sort of putzing around, if you will, not raising rates. They've raised the discount rate, but they need to be raising the funds rate. They're going to get behind inflation again. We're already seeing bubbles, and the Fed's got to move on this. Got to be raising rates.
What else about the survey? What about the confidence index? What are we seeing there?
The confidence is strong. And of course, what we're seeing, we've got the federal government kicking in $1.6 trillion more than they're taking in taxes. That's very stimulative. You've got, as I said, these very low and accommodative interest rates. You've got inventory levels are now growing. We had 16 months of inventory declines, and then all of a sudden now we've had 4 months of increases. This is very, very supportive of growth going forward. Optimism is strong, and I've been saying for some time now that job growth would be not that strong because of the lack of certainty. But even with that lack of certainty, that certainty in terms of healthcare reform, certainty in terms of cap and trade, all these other unknowns out there, even with that, it looks like businesses are going to be hiring now. And for the 9-state region, for example, we had about 25,000 jobs created for the first quarter. Now, obviously, that's not strong. We need to see a heck of a lot more than that, but we're going to see growth in the second quarter. So that's the optimism, the economic confidence was very strong, and I expect that to continue to be strong. Now, again, there are some economic headwinds out there, and those are going to have to be addressed. Now, the economic headwinds are things like Europe, where there are some real issues, but that's not enough to slow this economy down significantly. We've got the other economic headwind. We've got taxes rising. The third economic headwind, and I think it's a quite significant one, is state and local governments are laying off, and of course that's troubling. But again, there's the positives outweigh the negatives.
Overall, how does the survey look if you were to sum it up?
I'd sum it up as saying this is much better than what we anticipated. Now, what most economists anticipated, I'd like to say that, Cindy, you and I have been saying this economy is growing, going to grow. Now, the job growth that we're likely to see is stronger than I thought. That's the surprising part. Our employment index was up. It was not in the area that the prices paid index was up. I mean, it was up around 60. Of course, again, the index it ranges between 0 and 100. Anything above 50 signals expansion. 50 is growth neutral. The employment index was up. Every one of the factors was up above 50 in the overall. The components of the overall index, so that was quite good. We have one of the components of the overall index, which is the delivery lead time. Even that is getting longer, meaning that there are delays in accommodating new orders, delays in getting your orders in, and that's just a signal that there are these backlogs. So it was a good report. I expect the May report to be good as well.